Thank you for tuning in to another edition of the Vulcan Report. All right, we're wrapping up the year here, and it's been a very exciting, very extraordinary year. And we have a lot that we need to look back on to help to give us a better understanding of what's going to happen in 2011. Well, first things first, there were a lot of predictions and calls that took place. Most notably, just days before the May the 6th flash crash, I warned that the market was setting itself up for extreme movement and extreme volatility. And that was covered in a Goldman Sachs video. Well, within 2 or 3 days after that video, we had the May the 6th flash crash. It was that time that I immediately started to record a video in real time showing you what was happening in the market, and I even warned you that they were going to try to reason it away and blame it on something like a fat finger or a king error or something of that nature. It was then I developed a series of teaching videos explaining to you the way the exchanges work and how orders are routed and different order routing mechanisms. So that was one prediction that came to pass. Another prediction that came to pass was I told you what to expect regarding the movements of the precious metals, and particularly the gold and the silver. As the markets began to move and ebb and flow, I gave you a blow-by-blow video showing you what you could expect. I also did several videos where I examined the inefficiencies in the market because of government manipulation, and I actually showed you in real time several occasions where different financial instruments that are supposed to be virtually 100% negatively correlated to one another were actually moving in tandem. I did videos where I showed you that the dollar and bonds and gold and silver and equities and commodities were all moving up or down together simultaneously. And you saw that happen. Just amazing things happened in 2010. There were other people who made predictions in 2010, predictions that actually came to pass as well. 2010 was Terror 2010. Not so much as we had a gigantic false flag like on a scale of 9/11, but the media really pushed the envelope for terror. They set up a lot of psyops where they supposedly stopped would-be terrorists and would-be terror strikes against the U.S., but yet they couldn't stop 9/11. So they expect us to believe that they foiled plots of underwear bombers and sock bombers and shoe bombers and all types of other ridiculous things. And we know it's not true. It's just things that they set up themselves so that they can look good and so that they can push the envelope further to take away more civil liberties. We also saw the onslaught of the naked body scanners in 2010. And now we see the push to bring them to supermarkets and also to bus and train stations. We also saw just here in the last week them stepping up random searches on the metro. And that's right here in the Washington, D.C. metropolitan area. So they've been doing that. Just a whole lot of different developments. They're really pushing the envelope further as if they're really afraid of the American people standing up and pushing back. Now, with that said, you have often heard me say things, and they are a bit controversial. But in 2011, they're probably going to get even more controversial. I just don't have the time to make as many videos as I like to make on various subjects. There's a lot that I would like to share with you all, but I just don't have the time to do it. And then a lot of the times it ends up coming out anyway. Someone else reveals it or whatever. I don't have a monopoly on truth, and I don't have a monopoly on information. I just give it out as I get it, you know. Another development that we had was when I exposed the insolvency of Bank of America, and it caused a very big stare up here on YouTube, but then not many days later, WikiLeaks comes out and says they actually have paperwork to support what I was saying. So there you have it. A lot of things happening in 2010. The purpose of this video, though, is not to talk about predictions for 2011. I'll save that for another video, a follow-up video. But I do see a lot of things coming in the horizon in 2011, a lot of things that are going to be very shocking to a lot of people. So, without further ado, let's jump right into this video. You're looking at a chart of the silver spot silver futures contract, and as you see, we have been pushing higher even after pullbacks and consolidation periods. You also see the last pulse wave we just hit, which was on yesterday, the 28th, and you see that the last one we hit was on December the 1st. So we actually achieved 2 pulse waves in 1 month, which is pretty impressive. Sometimes it takes a little bit longer for those pulse waves to develop, but we hit them. So on December the 1st, we hit a high of 28.88, and then not many days after that, we spiked up to 30.70. Okay. Well, yesterday we hit 30.37. So we still have the possibility of hitting that $32 to $35 threshold between now and between today and the next few days. Actually, maybe in the first couple of trading sessions in January, if we don't hit it by Thursday of this week. So that's pretty much where we're going. You figure it took 3 trading sessions prior to hit that new high, so that'll give us about 3 or 4 more. This will put us right into 2011, hitting a new high in 2011. So we are bumping up against some major resistance here at the 30.37 level. We did manage to close above that 30.12 though, which is pretty significant. So as long as we can stay above the $30 price tag, we should be okay, and we should be able to test and take out the 30.70 high. So that's our first target, is 30.70 on the silver. Right now we have our first line of support for this move, for this actual new test of resistance. The first support is 29.28, and then our next support beyond the 29.28 level is going to put us in around here, which is going to be around, I'll give it 30, let's give it 28.53. We'll say about 28.53. Alright, so that's where we are. So 28.53 would be our second support after the 29.30 level. Okay, so as long as we can stay above the 28.58 level on a pullback and a test of support, that should build the next base, and a nice solid base for that $32 to $35 run. And we may even see $40 probably in the first 2 weeks of January, all things being equal. However, if we get a failed test of the $30.70 level, if we can't close above that, then we will test this the secondary support here at the 28.58 level, and then we will find ourselves back in a consolidation cloud here, and that's going to put us stuck in a trading range of $24.92 and $26.32. All right, so that is in our future if we fail to take out the 30.70 high. We need to close above that 30.70 high on this test, on this particular run here. We only have about 4 or 5 trading sessions to do it, to complete the wave, the pulse wave. If we do not, then we will probably fall as hard as the Kumo cloud, and that will put us in a 24.92 to 26.32 range, which leads me to my next point. We picked up a lot of positive bot checks the other day. Normally when we pick up these kinds of bot checks, it leads to a significant decline. Now, we did pass that 3 to 5 day threshold on the last bot check. The last bot check you see here was on December the 20th. Okay, we did not follow through on the downside and test support. All right, so what that means is anyone who is holding a massive short position is going to be put in a situation where they're going to have to liquidate at huge losses between the 30.50 and 30.70 level. So if the market holds that, it will push the momentum beyond the $32 and $34 pulse wave projection, because those shorts will have to be forced to liquidate. However, if the market manipulators have their way, that will not happen. We might spike it and spike a 32 or even a 34, but we might not hold it. And we could see within the next, I want to say, 2 to 3 weeks. All right, this alert goes out for the next 2 to 3 weeks. There is a high probability of a intraday May the 6th style flash crash in the precious metals in gold and silver. Again, based on the last bot check, we have a situation where we could see another candle like this, like we saw on December the 7th. All right, we could get a flash crash in the silver. If we do, the flash crash will probably spike down to the Kumo cloud between 24.92 and 26.32. It will not stay there, it will just spike down there. All right, that's the warning. So as you trade these precious metals, gold and silver, going into the new year, just keep that in mind. Do not trade the futures or the spot without using stops. You're an idiot if you do not use a stop loss. That's all I got to say on that. All right, let's wrap this up. All right, based on Tuesday's close, December the 28th, we did close up $1.03 in the silver futures. That was up 3.52% as prices closed higher than they opened. We had strong bids going into the close, and this is generally considered bullish as prices closed significantly higher than they opened. Now, if the candle appears when prices are low, it may be the first sign of a bottom. If it occurs when prices are rebounding off of a support area, the long candle that you see here, okay, adds credibility to the support. And similarly, if the candle appears during a breakout above a resistance area, the long white candle adds credibility to the breakout. Okay. Now we had 3 white candles occurring in the last 3 days. Although these 3 candles were not big enough to create 3 white soldiers, the steady upward pattern remains bullish for silver. Looking at market sentiment, we do have a pulse scan reading of 7.47. The market pulse is positive. This is trading above the 0 signal line. And we do have the pulse scan trading above the swing VIX uptrend channel as of yesterday's close. All right, so this means that positive momentum has entered into the market, so we expect sideways to higher prices within the next 3 to 5 days for silver. Now, the securities price has set a new 14-period high while the swing VIX has not, and this itself is bearish. Okay, it's a bearish divergence. All right, since the pulse scan leads the market 3 to 5 days out, we'll wait to see if downside pressure develops. All right, wrapping it up. Currently, the trend is still very bullish, and silver is under heavy accumulation. However, the overall trend strength is weak as we are range bound at this time. Price target projections that we're looking for within the next 12 to 18 months is $46.77. Thank you for listening, and remember to take what you can and give nothing back. And if I can't do another video before the end of the year, Happy New Year to everyone, and thank you for supporting this channel.